Well, good afternoon, financial professionals. My name is Brennan Derone, Chief Distribution Officer for E4 Insurance Services. Today is Wednesday, September 8th, and you are at the Brew, building relationships every week. As per the normal, I'm going to talk about some of today's national holidays and celebrations, but as we only have two, and there were some good ones yesterday, I am going to update those. So top of the list is National Another Look Unlimited Day. So I took that unlimited, freedom to look at yesterday's holidays. Also, it's National Beer Lovers Day. So I wanted to make sure that if you didn't have one yesterday, you can make it up today. And since it is the Brew. Also National Salami Day yesterday. On today's days, as I said, we only have two. It's National Pediatric Hematology and Oncology Nurses Day. So a very specific day. And it is also National Ampersand Day. So, and with that, I'm going to introduce our speaker, Doug Twiddy. Doug is a newer member of the E4 team. Came to us, started in July, beginning of July 1st. And he is an Eagle Scout and an Excel wizard. So you will see some of his handiwork. He and I have also, or not really, just really all Doug, has been working on a pension max that will come out later. But this is his term lettering. So Doug is a member of our design team, and you will love some of the designs he has. So Doug, I'm gonna hand it over to you and go off video.
Perfect, thank you. All right, guys, so Life Insurance Awareness Month, I wanted to run through an idea that I had put together a while back that I think really helps set advisors apart from anyone else out there when it comes time to selling term insurance. So this was my idea of a box, my little light. All right. So the purpose of term life insurance is very simple. All right. It covers temporary needs. It covers the cost of raising children, cost of college, the cost of housing, and income replacement. Very simple. All right. So old term versus what I like to call my new term, my laddering term. Right. With traditional term, you calculate the total need, you determine the longest need, and then you simply sell a policy that covers both of them. All right. With term laddering, though, we're going to look at calculating the individual needs. We're going to determine how those needs change over time. And then we're going to sell one customized policy that follows your client's very specific needs. All right. As an example, we're going to look at a male that's age 35, pretty healthy, so preferred non-tobacco, plans to work until he's 60, which is 25 years. We're going to assume a 3.5% inflation rate when we're looking at the cost of raising kids, college, and his income throughout life. Let's say he has three kids, ages 4, 7, and 9. A rough cost of $13,000 per year per kid in today's dollars. So with respect to those numbers, we're looking at $230,000 to finish raising the 4-year-old, $171 for the 7-year-old, and $135 for the 9-year-old. And then we want to plan to cover in-state college for each kid. So respectively, $75,000, $67,000, and $63,000. The mortgage balance is currently $285,000. Interest rate is 3.2%, and he has 27 years left to pay on the mortgage. After we finish raising the kids, we've put him through college, and we've paid off the house. He still wants to replace $12,000 a year to his spouse for the next 25 years, which is his age 60. And the total financial need here is about $1.5 million, with the longest need at 27 years. So if you had done that needs analysis, you would have probably done this, right? We would have looked at our iPipeline 30-year term insurance, and we would have determined that the best option is $111 a month, but that's $40,000 over the 30-year term of the client. All right, now that's the best option available to any advisor that's trying to sell that type of policy. However, with Excel, we're able to plug this data in. And if I can do a little laser pointer here, What this allows us to do is plug numbers into the light blue here. All right. So the average cost is $13,000 per year to raise a kid in 2021. You can put whatever number you want up here, or we can put whatever number we want up here to use this calculation. Maybe you don't spend nearly that much. Maybe you really spoil your kids. And that may depend on whether you have one or you have four. We put the ages of the children in, and we can even go down to -5 if you have a couple that's planning to have another child 2, 3, 4 years down the road, right? Whether we're going to plan for college. And then just for viewing purposes, these are the average costs of college this year. So you can plug in again whatever number you want. Then we'll plug in the mortgage, the interest rate, and the years left. And that will follow a true amortization table from something like bankrate.com, penny for penny as it decreases. And then the income that we want to replace, how many years, and inflation on everything but the mortgage. All right, so we can see the color coding here. Right now, it takes $535,000 to finish raising the kids. We're looking at $204,000 for college, $285,000 for the house, and $467,000 to replace the income, which gives us our $1.5 million need. However, in 10 years, the kids are 14, 17, and 19. So now we're only looking at about $59,000 to finish raising the kids. One of them is in college. The house is 10 years paid off, and we only need to replace 15 years of income, not 25. Right? 15 years down the road, the kids are all out of the house, mostly through college. You see where we're going here. All right. And we have a chart down here below that color coordinates with this. So you can see the mortgage decreasing. We can watch the income need decrease, the college go away, and the cost of raising kids to go away. So instead of selling a policy like this orange box here, right, a 30-year term at almost 1.5 million, what I'm proposing is we sell a $225,000 30-year term with a 20-year term rider, a 15-year term rider, and a 10-year term rider. Not 4 separate policies, but one policy with riders built into it. So we're not paying the policy fees for every individual one. And now what our policy is going to do is after 10 years, that 10-year rider falls off. After another 5 years, the 15-year falls off. And you get the point, right? So what we're looking at, if I can get rid of my laser pointer, I think. What we're looking at is Banner life insurance, 30-year term with the riders attached. And now we're looking at a monthly premium of about $72. That's compared to what we were looking at before of $111. So we're saving the client $39 a month, 35%. All right, that allows us to do one of two things. Maybe your client couldn't have afforded the $111 a month, and you were going to have to lower the death benefit just to sell them some insurance. And now you can sell them what they actually need. Or even if they could have afforded the $111 a month, you sell them a cheaper policy and it saves $39 a month for them to maybe buy a permanent life insurance policy along with it, because I think that's always needed. All right. The rest of the quote, we're looking at the decreasing premiums that go along with the decreasing term. All right. So compared to an annualized premium of $1,337, that first year, or I'm sorry, the first 10 years, we're saving them $473 a year, 35% savings. The next 5 years, we're saving them $722 per year, 54% discount. The next 5 years, we're saving them $865 a year for a 65% discount. And those final 10 years before they go to retire, when they could really be putting money into their retirement plans, we're saving them $1,000 a year. That's a 75% discount. So where the total premium was just over $40,000, now the new total premium is $17,438. That's a savings of almost $23,000 with a discount overall of 57%. It's a pretty good deal. But as we know, as insurance agents, we're not going to sell that face value. We all know that once you break $200,000, you're better off jumping to $250,000 because the cost per thousand of insurance is cheaper. So what I've done recently is I have added a box over here on the side that I like to call modified. It's got a question mark because it's up to you to run it both ways to confirm which one is best. What it does though, is when this number anywhere in here is between 200 and 250,000, it adjusts accordingly. So we increased the 30-year term to 250,000. That's a $25,000 increase. And we will decrease the others along with it. But we don't want to decrease this one by 25 because then we're below 250. So it's going to give it a 250 and it'll take the rest away from here. All right. We're still doing the same idea. We're still providing the same amount of insurance, except now we're looking at $67 a month. Not a huge difference compared to the 71, but it's cheaper, right? $67 a month compared to $111, which is a 40% discount. Going on from there, again, compared to the original $1337, that first 10 years, now we're saving them 40%. The next 5 years, we're saving them 58% and 68%. And then ultimately, we're saving them over $1,000 a year, 78% on their life insurance. Right. So again, where the total premium was over $40,000, now we're below $16,000 as an overall premium. That's a huge change. All right. That's a cost savings of over $24,000. And ultimately a discount of 60% on your term life insurance premium. That's my term laddering. Do we open for any questions, or can I show some examples with the Excel?
If you have questions, please unmute yourself and just speak out before you share some of your examples in Excel, which drove this whole thing. I would be remiss if I wouldn't mention that this is a good opportunity for you to do, insurance review with your clients, see what they have in place already. And, if you can get a 60% savings, I mean, they're saving more money. I mean, their premiums are less than their savings. So it's just amazing to me, the price difference that someone can get doing this. So we do have a question from Tammy Mark. Have you done this with UL and term riders?
No, I have not. The idea on here was simply covering temporary needs. So if you wanted to sell a permanent policy to go along with it, if that need was 50,000, I would just take 50,000 off of the 30-year term. Ultimately, I could further modify the calculator to take that into consideration, but I had not done that yet.
We also have another question. Is Banner the only company that offers this term laddering option with riders?
As far as I know, yes. It's been around for quite some time. I bought a policy myself about 7 years ago doing this. And I've got a $1 million term I pay $38 a month for, whereas it was going to be $72 a month if I had done a flat 30-year term. But I haven't seen anybody else do it besides them.
On term, I mean.
On term.
Yeah. As Tammy mentioned, I mean, it may make sense, and, we could just replace that 30-year option with a permanent, and then do term riders on top of that.
Mm-hmm.
So the one, and I guess we'd have to look at the carrier to make sure that the term riders are convertible, because ensuring your insurability is important.
On this, they are. Every term rider is convertible to Banner's only no lapse guarantee UL that they have. So my 10-year term is going to expire in about 2 or 3 years, and I'm starting to look at converting it now.
We also have the question, what if the client is looking to purchase a more expensive home in the future?
I don't have a way to take that future home purchase into consideration. They could own 2 houses, and that's not built into this yet. But pushing it out to all of you guys and getting your questions and feedback is what will further build this. So if that becomes something that we think is necessary, then we can definitely add it in there.
And as a point of clarity, we are happy to do this analysis, plug the numbers in, come back with the quotes. It's not that you have to run the Excel. We are happy to handle that step of the process for you. We also have a question on how do you apply for the riders? Is the application process easy?
Yeah, it's the same as applying for any life insurance. When you apply for the 30-year term, just as you mark riders for terminal illness or waiver of premium, you're going to mark the rider for the term rider and put the appropriate face amount next to it.
Awesome. Doug, would you like to pick a number between 1 and 22 for me?
17.
17. Our winner is Adrian Vanderwoody. So congratulations. For next week's brew, we have one of our new RVPs as well. We're going to keep with the theme of Life Insurance Awareness Month, and Jeremy Vidmar is going to do Back to Basics. So thank you for all being here. And any other questions before we call her quits for the day? Going once, going twice. Have a great week. And remember, it's Life Insurance Awareness Month, so have at it.